Hello, everyone, and thank you so much for joining me in another fantastic episode of the Cashflow Ninja podcast. My name is MC Lobsher. I'm joined by another fantastic guest, Josh McCallen from Accountable Equity. One of my favorite people to interview. He's back on the show again, and one of my partners in many different projects. Really excited to jump in our conversation today. Before we get started, we did relaunch our new website, cashflowninja.com. At cashflowninja.com, you'll find all of the other episodes. There's over 600 interviews with Cashflow Ninjas, such as Josh at cashflowninja.com, along with all kinds of other resources and so forth. One of my favorite resources, by the way, on that website is when you, if you want to know how to become your own bank, literally, you just go to cashflowninja.com or your own banking system. Without further ado, Josh, welcome back to the show.
Thank you for having me back, and the energy and the team. I'll tell you, the Cashflow Ninja community is one of the absolute best, and there's millions of podcast communities, and yours is probably top 10 in the whole system, in my opinion.
Awesome. And no, they really, a lot of our listeners that is part of our community and have come out to Renault, the Renault winery, and is involved with that project. They've met Josh and his team and Melanie and everyone involved there. And we're just honored to be a part of it and love what you guys are creating and building. For our discussion today, we got a lot to talk about. By the way, Josh was part of a live stream that I did for over 5 hours when the whole lockdown started, of exactly basically what they saw coming, what was going on, what they were anticipating, and what they were doing in preparation for the things that they anticipated. Now, a couple of months later, here we are. I think it's a good time to take some stock of an inventory of where we are and what we're seeing. So what do you see out there in the real estate world, Josh, that you operate in? What are you seeing in the economy? Some thoughts on the things as they are, status quo.
Well, it's now the summer of COVID year 2020, and we actually had a great time on your series, the Going Into the Crisis series. On that, I think our team represented that we thought the shutdown in hospitality, which we're in New Jersey, so they shut us down pretty hard, would last until June. We were almost right on. We were right on point, but they didn't all the way open. They opened up partially. So that kind of partial limping along in the economy, here's our quick prognosis, is that many people are treading water in the real estate business right now. There's been those forgiveness in other industries of forbearance, of loans. There's been PPP money that was given to us as a gift from the gods of money making. And there were other stimuluses given to us. So there's enough, perhaps some people might call it fake money in the system right now, where everyone's stable, at least it seems to me, even if they're not performing well. The great thing about that is it will come to an end. And good, bad, depends your opinion of how markets work. I mean, our opinion is we're getting ready for when stimulus comes to an end eventually. It's probably not this year, in our opinion. It's probably going to continue stimulus through this year. But eventually, it means that people will move on from their status quo position. They'll either dig in and build incredible next generation businesses because they'll have had an opportunity to really spend this time incubating work and ideas and strategy, or they're going to give up. And those are the people that we hope to meet, the people that are ready to move on from our industry sectors. And we're going to be peacefully acquiring through the turnaround here, through the downturn, in the trough. We intend to purchase. We're in the hospitality sector specifically, and we're going to get into that, I hope. But in general, that's how we see it, for better or worse. We're trying to be pragmatic. We're humble enough to know we don't know everything. So we are always around guys and teams and ladies like your teams. As a matter of fact, we just had Russell Gray on our capital hacking show, and he gave his diagnosis. He's that famous financial analyst from the real estate guys. So anyway, I hope I answered that well. But if I didn't, pepper me with questions. I'm ready to go.
No, that's great. That's a good summary, because that's a lot of the things that we're seeing too. And if you think about real estate and you look at just the landscape right now, there are some niches that are just on fire. I mean, there's certain markets that's just exploding, with a lot of folks actually moving out of big cities, right, and moving into smaller markets and smaller cities. The work from home trend is now accelerating with a lot of big corporations that still have employees working virtually, and some of them have even announced, like Twitter, that they're not even going to require people to actually come in to work anymore, but they can work remotely. So that's going to continue with the exodus of a lot of folks in certain markets, especially very, very densely populated areas. I mean, people were afraid of the virus, number one. There was a lot of fear of that. And then now the way that we work has sort of changed, right? So that's one. If I kind of look at certain real estate niches, then you look at commercial. And more specific, if you look at malls, stores, restaurants, office buildings, very, very, very challenging time ahead for those niches. And some of them might never come back in the shape or form that they are currently in, right?
Well, if you let me, the whole thing about the mall, the death of the mall has been documented over and over again by people you and I know. And there's but I'm tempted to tell you about what's been going on for us in our business, because we build these destination resort businesses, which we can get into, and we can be challenged by you and your listeners as to the pro and con of being in the sector. But one of the real interesting pros that just came up because of the death of the mall is that resorts like ours that attract thousands of people a week, that are new and that are affluent, new to us, I mean, that we are the future of retail. Because remember, retail, not Amazon retail. So Amazon's got the future. They got it locked up, tied up, and put a bow around it. But how do you discover new brands? Yes, if it's not branded and you just want an iPhone wire, you go on Amazon. But how do you discover a new perfume or even a jewelry set? Or how do you buy? So we were approached by a Ralph Lauren expert. He worked with them. He worked for other major brands about accelerating all of our market spaces here on property to become discovery retail. So, or perhaps higher end retail. And boy, it blew my mind, MC, because and even that group of retailers, I'm sorry to digress here, they almost using their eyes to look at how we perform and the types of opportunities we create at this resort and resorts we build. Sometimes you don't even know all the cash flow streams you're creating at first, 3, or 4, but we may have just tripped into the future of discovery retail, and we may be like necessary. So remember, the old mall was a discovery zone. Like, you went there because you wanted to go to a store that you knew, and you walked past 6 stores you didn't even know existed, and you discovered something you had to have that day. And that's how they built their business, right? That was the
window shopping.
Yeah. Well, there's very little window shopping happening in malls anymore. The foot traffic's micro. I was talking to this Ralph Lauren retailer who said to me, and he's not just Ralph Lauren, but that was one of his big clients. He goes, "You'll have more foot traffic here a week than an average suburban mall," meaning walking by their retail product. So he says he thinks he can actually merchandise some of our spaces into a cohesive. Sorry, that was a deep dive, but you guys are cash flow ninjas, and that cash flow ninja genius that you came up with to, play off of all the stuff you and I have learned from Robert Kiyosaki and make sure you have cash flow streams. That's what our businesses do as well. So much so that we named our little podcast an ode to you. We named ours Capital Hacking. And what we mean by capital hacking is sometimes you create new revenue streams while you're making your primary revenue stream. And then the secondary and third and tertiary revenue streams become just as valuable, and they transform your wealth. So, but sorry for the digression there. But if the death of the mall is coming, perhaps we may be the beneficiary. And that's not even in our business plans. As you always know, we try to keep things out and let them be surprise positives.
Yeah. And well, let's talk about this for a little bit. Let's talk about the niche that you're in, because a lot of folks are probably listening to this and going, wait a second, what? You didn't talk about hospitality
I know.
Or travel or cruise lines or airlines or rental cars or destination resorts. Like, they're getting clobbered right now.
Absolutely.
And that's kind of, I guess, the message that we're trying to share too, that yes, and you'll enlighten us a little bit of what's going on there, because there's obviously very, very dark days for the majority of destination hospitality properties. But one of the things I'll share this, one of the lessons that I've learned. CAMAPLAN is one of the leaders for personalized tax-deferred and tax-free IRA planning. CAMAPLAN's team can assist you to take control of your retirement funds and financial future through self-directed investing. They offer support to clients throughout the entire process, from opening your first account to making your first purchase to self-managing your assets. CAMAPLAN works with a growing network of investment providers in all asset categories and offer free investor education through classes, events, and webinars with over 15 years of leadership in self-directed retirement investing. CAMAPLAN will help you unlock a convenient and safe way to manage your retirement investments and discover financial freedom beyond traditional investments, beyond Wall Street, and go from forever taxed to never taxed. Start to take control over your retirement funds and financial future today by visiting cashflow.com/CAMAPLAN. Just by interviewing amazing cashflow ninjas and just studying and looking at how the really true masters, and they're still in pursuit of mastery daily, that's one of their traits, but how they see the world and how they look at the world. And one of the things that I learned is, they will look at the marketplace and they will look at people and ask themselves the question, what are some of the assumptions of all these people and the marketplace, and what are the lies that they're believing? Because there's a lot of lies that people believe, things are that aren't necessarily the truth, and they will then position themselves contrary to the positions that the majority of the marketplace had. Another thing that I've also learned from these incredible cashflow ninjas, one of them that I really, really learned from, and still today, learned a lot from his books and learned every time I interview him, was Jim Rogers, that I had on the show, episode number 600. Fantastic. And one of the things that Jim Rogers always said is, I asked him, and sometimes when you chat to people, you forget of whether this was in the episode or, the chat that you had before or after it. But he said something to the effect that, for him, he tries to keep it simple. When money is lying in the corner, he just goes and picks it up. And I asked him, so, okay, what do you mean by that? When does money lie in the corner? And his response was, when a certain asset class or a niche inside of an asset class is so attractive or unattractive, at that stage, basically rock bottom, the media is all over it. It's just bad news on that particular commodity or niche and so forth. He'll be very, very interested in and look at the assumptions. So I actually asked him about hospitality and so forth. And he said to me, he said, MC, are people going to travel again? Are they going to go on vacations? Or anyone going to get married again? Yes, of course they are. So I know I rambled on for a little bit, but talk to us about hospitality, the niche that you're in, that you're operating in. And obviously right now there's a lot of bad news out there for folks. So if you don't mind sharing a little bit of your insights.
Yeah. So let's hit the insight straight on. If you were to Google hospitality industry, hospitality investing, investing in hotels or resorts, there would not be one positive report out there right now. And and Marriott and all the big boys now, even though their stocks are showing great right now, they're not at all-time highs, but they're not overly affected by this. Their stocks, almost the public sector stock market is telling us, they took a little bit of the gains off their stock, but they're here forever and it's not going away. So let's go back and let's double check. I heard the Jim Rogers interview you did at episode 600. It was incredible. Thank you for pointing that out to me. And what I think he means by the money in the corner, like you were saying, he says the wealthy live in the world and they see contrarian opportunities, like whatever everyone's believing, perhaps the wealth is in the opposite. Well, right now, the wealth is in buying something that is artificially depressed. So in the short run, restaurants cannot operate very well. Resorts cannot operate very well. So there is definitely short-term pain and short-term cash flow pinch. But in the long term, we have to just look back to human nature. I mean, human nature. Let's think about all of us. We know we want to be outside. We want to be in beautiful places, whether it be golfing or waterfront or, in our case, culturally great wine and things like that. We know we want that, right? Well, none of us have changed our human nature. We've completely restricted our way of doing things right now, for the good or for the bad, whichever your perspective. But our human nature may win in the end, right? We're going to want to enjoy living again. We're all taking a pause because our leaders asked us to, but that doesn't mean we're forever going to take a pause. So what if you could design a program that could allow you to acquire in the down trough? And I don't mean the bottom of the bottom. I mean the trough. We're in the trough, in our opinion. So let's build a program to take advantage of this opportunity to correct the market, to let people, leave and exit their properties, even though they're going to sell them at a humble price now, so that we can build for our investors long-term wealth in a niche that we have become very comfortable in and have been considered an expert nationally in. And you know what our expertise is? Sorry for all those who don't know Josh yet. If you're like wondering who I am, I'm the other half of the Melanie and Josh McCallen team from Accountable Equity. Okay. And I know MC has had us on the show, both of us, a few times. So if you wouldn't mind, MC, would you mind putting a link in the show notes so they can hear Melanie? Because her voice is so much nicer than mine. And she tells the story about why we do what we do so well. But to cut to the chase, we developed this expertise of turning resorts around. So in the great times, we had to go really out looking for distressed resorts. Once we found one, we then did some underwriting and did due diligence. And if we believed our model could transform them, we would acquire them and produce mega transformational values and wealth for the investor. And then eventually learned how to give that wealth to more and more investors through syndication. So right now, my daily life, like Melanie's down with our construction team. We have a construction company now because of all the work we do. And I'm up here at the same building, but in the offices, being able to speak to you, thousands of wonderful cash flow ninjas that, and so many of you have found us and have joined us because you get to come see what we do and get to know us. Actually, MC joined us. We're so honored to have you and Megan on our team. And Accountable Equity means that we're just a group of people that want to be cash flow ninjas. Really, we want to take some responsibility and put some cash flows in our life right now while we're young and enjoy it. That's the other secret. What if you could buy an asset that produces as well as any other private asset right now, or bigger? We're in the double digit to almost 20% IRRs in our projects, and yet you can enjoy our assets, and I know you did the other day with us, with the kids at the pool. You get to come see your resort. And yes, you have to buy the cheeseburger when you're here, but the cheeseburger money is going back to you eventually as the owner investor. So, man, we've created a circle of life here, like a cash flow ninja circle of life where the money is producing wealth for our investors. So to summarize, Melanie and Josh are all about loving our guests. And now we're all about trying to create something called investor hospitality through Accountable Equity. So that's what we do. It's our passion.
Absolutely. And for folks that have not listened to the previous, you guys have been on the show twice. There's 2 fantastic episodes. One about what they do and the project at Renault, where Josh is currently at and doing the show from. And then the other one, they actually were one of the first folks in my network that actually did an opportunity zone project. So not just a fund, a project. So I would highly recommend go back and listen to those 2 episodes. If you haven't done so already, there was a ton of value packed in there, and more about Renault, and then also the opportunity zone. So one of the things that we touched on is real cash flow ninjas. They buy low and sell high. So when there's a very distressed asset class or niche, they will look at opportunities in there. They would purchase those opportunities, develop it, bring it back to life, right? Revive the soul.
That's our business.
Yeah, as what you guys do and do so well, and then add ancillary opportunities for cash flow to the existing streams already in there, because there's so many. I just look at the Renault project, besides of the wedding venues, I mean, besides the restaurant, the winery, the golf, we could go on, and you just mentioned the retail opportunity that'll go there eventually. There's a lot of different streams to this. So big picture, there's an opportunity in a crisis, and we've spoken on the show before, even during the 5-hour-long live stream. It depends how you wish to see this. You could see this as a terrible time, or you can actually see this as an opportunity. And there's a ton of opportunity in this space. Now, there's one thing that I'll add to what needs to be in place for an opportunity actually to flourish and be capitalized on. One of the things that I've spoken about is talent and skill stacks. So if you have one skill or one talent, that's great. When you stack another one on top of that, now you become dangerous. Now you stack a couple more and collaborate with folks with talents and skill stacks. Now you become really, really dangerous. Example, someone that's really good at real estate investing, that's a good talent and skill, then adds a marketing talent and skill stack on top of that. Now you're becoming very dangerous. Now you combine with, let's just say, someone that raises capital, and that's his talent and skill stack. Now all of a sudden, watch out, world, here you go, right? What the opportunity lies here is we have the economic environment that's there. We've seen that in niche and industry decimated in many different ways, but we have an operator with talents and skill stacks, and that's collaborating with other folks with talents and skill stacks, and a success story at Renault. Maybe you want to talk a little bit about that too, Josh, because for folks listening to this for the first time, Josh hasn't done one property. He has a track record of doing many properties over many different years, and with the latest success story, Renault, and maybe touch on Renault.
Sure.
What Renault has done through this time too.
Yeah, there's a case study to be had. So this will be our fourth. I'll be the president 3 times, the founder 1 time, and this will be our 5th mega resort turnaround. Some have called me from the Bigger Pockets community the hotel resort burr people. And so we buy them, we do spend the money on rehabbing, then we rent them, reposition at a higher price point. We then produce yield, do the refinance. And that's where the investors enjoy being part of us, because they have their capital back with a very short 5 years or so. But then they have perpetual ownership, because we are a buy and hold company. We're like the burr. We're definitely not flippers. Some have asked me, so you sell them after 5 years because you can get a check. We can get a check, or we could get cash flow forever. And in the meantime, build out a portfolio of doing this all across at least the Eastern Seaboard in the next 10 years and continue to do it. So with us, we do develop our expertise. We do surround ourselves with experts. We believe in that idea of collaboration. There's a sense, our culture of Viva May and hospitality has 3 core values. Then we bring these same 3 core values into our fundraising program, which is called Accountable Equity. And we say, to join our teams, and we say this to all our partners and collaborators, and honestly, now we are even learning to say it to our investors. Do you share our values? And here they are in 3 words. We were on Bigger Pockets business the other day, and we did a whole show on these 3 words. So I won't redo that whole show, but we say, do you share joy for what we're doing? And if you do, that's the first indicator you might want to enjoy. If you enjoy this work, in our case, it's resort turnaround. It's kind of like a gigantic HGTV show. Do you enjoy that? 2, do you have a certain humility?
We are living through unprecedented times, and many experts say that in the coming months and years, we're about to see some of the best real estate opportunities of our lifetime. Who's going to benefit the most from these opportunities? Those with access to capital, which is where the Real Estate Accelerator comes in. Brought to you by Good Egg Investments, the Real Estate Accelerator is an online course and mastermind that will give you everything you need to raise private capital for real estate syndications. Through building a killer brand that attracts the right investors, you'll be able to take advantage of the upcoming opportunities and scale your business. To learn more, check out cashflowninja.com/good egg.
Humility that allows you to constantly learn, to seek advice, to treat others with infinite dignity and worth. Then you're going to love it working with us. And then 3, do you want to do this work as a ministry? And what we mean by that is the simple tasks of either putting together a fund, which is actually a more complicated task, or cleaning up after our friends after a dinner party. Whatever the task is, it's your intention is whether or not it's a ministry. So if your intention of producing a fund for the greater good of the families you serve, then it's a ministry. You're doing something intangible for the greater good of those people. If your goal is, I need to raise money to do this project, that's okay. And it's not illegal or wrong. It's just not a ministry yet. It becomes a ministry when you attach the good of those that you're doing it for. So that same work we do in hospitality and the way we greet you at the door and feed you a great meal and then serve you the best wine, we try to do that in our capital group. And our capital group has grown hundreds of good people that are all like this, that are trying to live abundance, meaning give back and educate each other and be there for each other. So lots of what I just said there is interesting, but let me go back to Renault as a case study. So Renault is a case study that we are also using at our next big fund, which for those of you who wanted to join Renault, there's still that opportunity zone opportunity. You still can join us there. We can explain that to you if you ever want. But the next projects are full. You have full partner equity available still. So why is that interesting? Our projects are based on one thing. We say we're going to be doing a massive turnaround, just like a Burr, but we have to have steady cash flow into the business while we're doing that. So this was an elusive mystery how to do this for the first 5 years of my career before I even created these firms. Is I didn't realize we were missing the boat on one big thing. Because we were building beautiful resorts, we were getting attraction from wedding leads and things like that, as well as tourists, as well as wine aficionados. But weddings are different because those guests will show up 18 months before the building's even done, write a very large check, 25% of the investment, maybe a $40,000 or $50,000 wedding, and that cash flow then goes into the asset that you investors buy. It becomes a hedge. Even in a down economy, it becomes a hedge for the future because you have a contractual revenue model that is almost unheard of. I mean, it's even kind of unheard of in any other resort you think about, because a lot of times when I thought of resorts before, I always thought of summer, or if it's mountain time, and you charge an exorbitant amount for a peak time, then you charge an average for a lot of time, and you charge a little for the time that nobody asked you for. Well, with weddings, you end up charging about a consistent rate for about 10 months out of the year, which is cool. And it's a game changer. When we look at an analysis process and we look at a project and a property, and that property was built on tourism, which is destroyed right now, that's the people that we're going to be buying from over the next year. And we have one cherry project we just got under contract and we're about to buy right now. We're going to buy from them because their whole goal was tourism. Well, tourism stopped. Plus, you don't get advanced deposits on tourism. They call you that week and they stay and they might spend a lot, but that's it. And we transitioned tourism plus contractual weddings. And now what we can transform the value of the business before the buildings are even restored. That's what I think caught your attention about Renault, is you saw it when we had to tear apart 155 years of mistakes and bad plumbing and walls fell down. And, it looked awful. And during that same time where there were some ballrooms without walls, we sold 210 high-priced weddings. Now, not high. Our other model is we sell to the high middle class or low middle class, depending on the dates. So it allows us to have a very large market. Hey, one little surprise, buddy. You'll be shocked. I'll send you this. We just got an article, some blogger ranked New Yorkers, Manhattan's 10 best wedding venues. And we're nowhere near New York, but we serve the New York market, and Renault was number 8 already. We barely finished the buildings during Corona, and we already show up on some wedding guru's website as one of the best venues for Manhattan ladies. Shocking. that it's that quick because we barely got the rooms done, right? Right, MC?
Right. Yeah, absolutely. And one of the things that I would share too about Renault and what is important, and just a little bit that I've learned in this business too, is the proximity, right? The location of it, especially in that market, as you mentioned. It's not too far from Philadelphia. What is it, about 45 minutes?
Yep.
Round about there. And what is about an hour and a half from New York?
Yeah, hour and 45 to be generous.
Hour 45. Okay. Yeah. So it's in close proximity. So it's almost like a weekend getaway.
Yeah.
A destination situated really nicely in between two very, very large markets, right? Two metro areas.
And the secret, the reason we are ready to grow during the trough. Oh, I forgot to say this. This is the part you and I always we scratch our heads because you get my regular reports as an investor. We have sold, I think we crossed over the 85 weddings sold during Corona. Now, to give you comparable, go call your friend that works at the country club, or call your friend who owns a wedding hall or a hotel and say, how many weddings do you sell in a year? And they're like, we're amazing at selling weddings. And the next number that comes out of their mouth, they're going to be very proud of. And they're going to say, we sold 55 last year. So an excellent resort, really well done, really well run, probably sells 55 to 85 weddings in a year. In Corona, there's nothing positive happening on the news. I don't know if there's been a positive news report since March 1, if even then.
Yep.
Since that date, since the shutdown of Corona, this property has sold over 80 weddings. Now, and that means money in hand, by the way. So while everyone else was shutting their doors and had no revenue, we also had no daily sales of beer or sales of wine or sales of cheeseburgers. But we were bringing in 25% of a wedding from 2022. So that bride recognized, and she's actually an indicator, isn't she? She was really ready to pay in today's dollars for a wedding in 2022. She's almost like an indicator of what Jim Rogers was saying, is that we will go back to life. Now, last person that you and I use as a mentor that obviously is guiding our current investment process and philosophy is Warren Buffett. And we said to you months and months ago when the Corona started and the shutdown started, here's what we're going to do. And we laid out a 3-step process. We did everything we said. We had to do immediate furloughs. We had to preserve. We had to wait for the governor to say when we can let people come back. We kept in constant communication with our staff, and we've gotten back all of them. Then we said we were going to build the program for accountable equity and build education into it and create value in and of the self of our community, kind of like you. Where you have an incredibly dynamic community, even if they just listen. And you don't even charge for a lot of the things you do. So we don't charge for a lot of things we do. And then we said, if we have a great community and they get to know us in the downturn, they'll learn why we're investing in the downturn. And that's all come to fruition today. And we're so blessed by that. So Warren Buffett says, be greedy when they're greedy, be scared, have fear. And when they're afraid, be greedy, which I don't like the word greedy. So I always say, be a contrarian, basically is what he's saying. So we built this business over the last 10 years, being a former president of a major company and now a founder of this company. And we were buying in the best markets, right? It was going up that whole 10 years. And we were still able to find distressed resorts. And we were still able to quadruple the value of some of them in just 4 or 5 years. And that's where the BRRRR strategy works.
Yeah.
Well, now with the economy taking a back step, and thank the good Lord, the entire media is against our industry. It means that we're going to go right into the nozzle of the fear and hose and be able to see the intrinsic value. I mean, Warren Buffett buys trains when no one wants trains, but then he turns around and realizes that the whole world's going to run on trains and truck companies. And he was right. It had an intrinsic value because of human nature. So our premise is that human nature wants peace in their life again, and they want to celebrate with each other. Maybe not today. So that's where our model of a turnaround with a 5-year horizon almost fits a trough perfectly.
Yeah, and I think a lot of folks in our community has reached out to me and said, when is there going to be opportunity? And my response was, real estate moves slowly, and we haven't really seen a big of the fallout because, as you mentioned earlier in this conversation, a lot of money has been thrown at this, and I can't see it slowing down on the money printing or money digitally entered on a computer somewhere. I can't see that happening anytime soon. And as the time of recording right now, they're now in the process of renegotiating and delivering another bailout package, which I mean, I don't know the size of it. I don't know if it's going to be the size of the previous ones, but it's going to be pretty close. So the reason why I share this is there is already opportunities, because the hospitality niche, although they've been trying to throw some money at it, when you halt something and it comes to a complete stop, not even a slowdown, a complete screeching halt, there is nothing going on. Then the fallout is already started there. What I wanted to ask you, Josh, is from the success model. So the model that you have and your competitive advantages, and really with the value creation that you guys provide on the projects that you're involved with and touch, to copy that and to take it to a very, very similar market makes then a lot of sense, which is ideally one of the first projects we're looking at right now, right?
Yep.
Where we basically have taken the Renault model, look at markets that are similar, and even that might be, in our opinion, even better position for this new world that we're entering, and taking it to that, right?
Yeah, I mean, this show has been phenomenal, because I hope everyone's heard both of us are very pragmatic about all this. What we found was a property before Corona. We found, you and I and our team of sponsors and good partners, we found something. We found something through being in the right place at the right time, meaning we can deal with properties that are multi-million-dollar resorts, but they're not $100 million resorts. We will get to the $100 million level in a few years, but so we fly below the Hiltons and the Marriott. So we were offered something that is world class. It's outside of DC. It's on the water. They call it the Eastern Shore. If you're aware of that area, you are like, this is like the Hamptons to us New Yorkers. You know, when we hear the Hamptons, we hear wealth and lovely getaway. When you're in the DC market, you hear the Eastern Shore and you think, I got to get there right now. I need peace. And it's only 45 minutes from DC where we're buying, and we're getting 226 acres and 1.7 miles of water and a marina and a small resort and a huge, I hope I said that correctly, huge wedding business. Now, they don't know that. Currently, it does an anemic number of weddings. So how do we know we're going to be able to capture the weddings? Well, I'll give you guys one teaser. Last 2 years ago, when we bought Renault, our thesis was, if they're getting almost 800 inbound phone calls for weddings, and we used to be able to bring in 4.5 a year off of 500 inbound, let me just throw that into a model and see what I can do. This property with very little marketing is getting 1,200 phone calls a year to have a wedding there. Why? Because it's on the water in the Eastern Shore, and it's 200-year-old resort. So, but they actually had an aversion to selling weddings because, this is a little teaser, because it's run by a family. Now, I love the family, and I've gotten to know them, and they're suffering with cancer, and we pray for them. We love them. But they actually consider weddings a burden, because remember, weddings require staff and a chef, and so they do them, but they do them as little as possible, they said. And I'm paraphrasing, but their point is instead of running it like a business, in the sense where you put a pro in the chef spot, you put a pro in the ops spot, and you go ahead and get all the sales process in place, and you sell 200 weddings, they're doing okay right now. What if we just go ahead and capture those leads?
Investors, don't sleep on this market and trends. Did you know that in many cities across the U.S., renters now outnumber owners, and demand will only increase? More and more will be renting in droves, and it's putting the squeeze on a tight rental market. Four Peaks Capital Partners has been successfully investing in this proven, recession-resistant sector for years, providing investors with passive income and capital appreciation. Protect your portfolio and invest in private real estate funds, because the demand for affordable housing will only increase. Invest with Four Peaks and let us do all the work. Find out more by calling 8775-INCOME. That's 8775-INCOME. Or visit privateincomeinvesting.com. That's privateincomeinvesting.com.
And with our current experience and how we train and operate a sales program, we anticipate being able to way outperform the performer we wrote. And as a matter of fact, the lenders have agreed, the CBRE, who's now actually Cushman Wakefield, who's appraised us multiple times at our other projects. They now have come to know us. We have like a reputation with Cushman Wakefield. So when they saw our performance, they specifically said it was under what they believe to be true because they know the market. So we're in a great spot. And the last part about this is we found it before the recession. So we had it under contract. We were going to acquire it during the recession. We even had money being sent to us from investors right up until the Corona. So we had it under contract. We actually removed ourselves and asked for a change of contract terms, got them, and now we're back. So a deal that would have been strong either way just got 20% better. And those are the types of things that we believe we'll be able to execute on just because we put a team in place. You know, this is not just Josh and Melanie. It's Josh and Melanie driving a team of incredible pros.
Yeah. And again, it's a win-win around the table for the current owner and seller of it, the new team coming in. So it's been very, very interesting to just see all of this develop. And like we stated before, it's an extremely interesting time with extremely interesting opportunities. The challenges are going to be much, much bigger moving forward, but the opportunities are going to be just equally as great as the challenges that there lies. So you might be listening to this and thinking, this is crazy. Whoa, what are we talking about here? Hospitality, like Josh was saying, you look at the news and anything like that, it's been really raked over the coals. And we're saying that there's a massive opportunity here. If this is something that you're interested in, there is a webinar that we're going to co-host on this. So I just wanted to share that. We're actually going to put that at cashflowninja.com/Kent. That's KENT, cashflowninja.com/Kent. If this intrigues you and this is something that you want to learn more, definitely check out the webinar there. And Josh will share more about this. It's definitely something we're looking at just from an educational purpose. Because
it'd be great.
This is in real world, basically analyzing things, a changing market, and seeing where the opportunities lie amongst all of these many, many chaotic things. Right, Josh?
Yeah, I mean, I appreciate those who join. You and I, whenever we do these, we do make sure they're very educational. We show you how we do the underwriting. It's a joy just to get to know more people. You never know. I mean, you never know if this is the right time for you. But I think those of you who in your bones are saying, wait a second, hospitality, it is so distressed right now, but is it really ever going to go anywhere? Are people going to stop having weddings, stop using boats? I don't think so. You know, and I hope if you're on that mind, you're like, wait a second, they're right. We can't wait to educate you on how we do these underwriting and what our team does for a living. And we just appreciate all you guys that have interest in us. We thank you for that.
Josh, right now, I am always interested to see what people are studying and learning amongst this. I mean, it's been one of those years where you get in the car and you learn how to drive it, right?
Yes.
What are you currently studying and learning right now?
Oh boy, I have a lot, but I'm going to go with one book that has been given to me recently, and I just did a podcast on it. It's called Profit First. I don't know if you've heard of this group. Anyway, So I'm intrigued by the principle because we are the kind of entrepreneur that actually just waits and waits and waits until businesses return money to investors and all kinds of good things. So we live extremely frugal, and that's cool. But this book tells you to count profit, even if it's 5%. Count the profit from the businesses you're running. I'm not talking about the buildings right this minute. I'm talking about, we have a management company. We have all these things. Put a little bit of profit away and get more and more creative on how you execute. And boy, I'll tell you, that's just been like a revolution for me recently. And I'm glad it's been put in my life. And it's baby steps. Eric Cabral and I, your buddy, we were listening to the education the other day on the show, and I was thinking baby steps here because he's like, take 20% and give it to yourself. I'm like, no freaking way. Keep the money. I've always been in mindset, keep the money in the business so we can generate growth each quarter. Anyway, it's a new mind shift, and I'm trying to learn from all different sides.
Great book. Great book. And definitely, I mean, like you said, baby steps, right? And being from South Africa, I always say, how do you eat an elephant? One bite at a time.
Wait, are you allowed to eat elephants in South Africa? I don't think so.
No. Awesome to connect again, my friend, and having you on and sharing this. Folks are always wondering what we're up to, what we're involved with, and want to get a little bit of an insight. So this is something that I definitely felt worth sharing, to just share with folks what is happening behind the scenes in real time, how our folks are looking at opportunities as they are developing. Another thing is, if you want to join myself and Josh at a future event, a Learn and Grow event, you have these quarterly events at the Renault Winery. It's a fantastic community where a lot of like-minded individuals come out. There's always a ton of Cashflow Ninja listeners and
absolutely
folks from our community there supporting it and going out there, spending time around amazing people, learning from others, and enjoying some great food and great wine. Maybe you just want to say something about that, and also where folks can follow you and learn more about what you guys are doing.
Yes. So the accountableequity.com, we put our mission in our name. We take this stuff very seriously about the trust that have been offered to us by so many good investors. So the Learn and Grow, just to tell everybody what he's talking about, we have this principle because we invest in resorts. We want our investors to benefit both emotionally and enjoyment while they're getting double-digit ROI. So what we do is we created this. Actually, we bring in keynotes quarterly, and it's a reason and a purpose for you to come back and see your resort, perhaps show other friends what it's like. And it's not actually all about accountable equity. The last one was about Bob Wells, who's an international Tony Robbins trainer, was the keynote. So that was incredible. And MC's been an incredible presenter. So, by the way, MC, we're going to do one a quarter, but it'll probably travel around the multiple resorts as we grow. So perhaps the next one's in Maryland. We don't know. We'll announce later.
There we go. I'm going to hold my breath on that. Awesome stuff, Josh. Thank you so much for joining me on the show, and as always, providing so much value for my listeners and for all of my viewers and all the Cashflow Ninja community folks out there. This has been another episode of Cashflow Ninja. Again, as I mentioned, all of our previous shows are at cashflowninja.com, cashflowninja.com. I can't wait to do another episode for you guys. Until next time, live infinitely.